Greetings, Grade 12 learners, and welcome to the very first class for the year 2025. It is a joy to have you in my class. I'm so excited about this year. Last year, it was a very great year for us with so many learners that were joining us on this very same platform in this class and with excellent results. I know that this year with you, we're going to do the same again. So once again, welcome to our class. All right, and then my name is Mr. Simbi, and this lesson is brought to you by the Gauteng Department of Education in collaboration with Sabono Discovery Center. Here's what we're going to be looking at today. We're going to look at the company's unique ledger accounts. My objectives for today's class are very, very simple. I'm going to look at the company's concepts. I'm going to look at the company's unique ledger accounts. And then I'm also going to look at major shareholding. All right. So if you need help with these areas, I suggest you get somewhere to write, get a pencil, get a pen. A calculator is very essential in accounting. I want to stress this out right from the beginning. Make sure that you have a calculator that you know, a calculator that you call yours, that you're going to be using every day. All right. And make sure that these lessons that we're doing, you keep record of them. Every Friday, we meet here, we have class until we finish this academic year. All right. And then, let's begin with our company's concepts. You remember what you did in grade 10? In grade 10, you did what we call the sole proprietorship. This is a business that is owned by one man. Remember, this guy has his capital, so he comes and he starts his business. The profits are his. He also incurs expenses, which are his, and then he enjoys the profits individually because it's a sole proprietor. And then in grade 11, which is last year now, you did partnership, remember? And then in the partnership, we did all those accounts. But in this year now, in your grade 12, the story is going to change now. Some of you already know that the story has changed already because now we are talking of public companies. Public companies. What are these public companies? How do they even start? And then when they've started, how do we record transactions in these companies? I'm going to show you all of that today. So make sure you have somewhere to write. Taking notes is of great importance. Make sure you take notes. Make sure you write the things that I'll be explaining here down. Are we cool? All right, let's go. So to begin, let's talk about shareholders. What is a shareholder? A shareholder is a person, a company, or an institution that owns at least one share of a company's shares. So you understand that when a company is starting, that company has to be registered. Remember, it begins with the promoters, the people with the idea, and then the company is registered. And then once it's registered by the CIPC, the Companies and Intellectual Properties Commission, once the company is registered, then the company can then issue out shares to the public. And individuals or companies that buy these shares are what we now call shareholders. So this can be a person or a company, even an institution that owns at least one share of a company's shares. And the number of shareholders in our public companies. So remember, we're doing what are known as public companies. And then the number of shareholders in these public companies, it has to have a minimum of 7 and up to infinity. Who manages this company then? So you understand that the number of shareholders can be up to infinity. And it is therefore impossible for all these people to come and manage the business, as we did with the sole trader. In the sole trader, the one man can manage his business. But if you have so many shareholders, are they the ones that are going to be doing the management of the company? Certainly not. In a company, we have people that are appointed to the position of directors, and they are appointed to make certain decisions within the company, to be responsible for the day-to-day running of the company. And these directors are appointed by shareholders. Now, when a company is registered, one of the key aspects is for them to raise capital in order for them to begin operations. And the only way, or the best way, that they can raise capital, Remember, there's more than one way of raising capital. I'm going to talk about this even as we go during the year. But one of the ways that the company can raise the capital is by issuing shares. So we will have what we now call share capital, which will raise through the issuing of shares to the public. You remember what I said, that this company is owned by so many shareholders, and you realize that in the sole proprietor, the person and the business are one and the same thing, which is different now when we come to companies, because in companies, the company is a separate legal person. It is a separate legal entity. In other words, the company has a legal status. It can sue or be sued. That is the difference now with the sole proprietor. So in terms of legal entity, we're talking about the legal status of the company. And the company is a legal person, or it is a legal persona. That means it can sue as well as be sued. In the event of profits and losses, the profit generated is partly paid to the shareholders in the form of dividends. I'm going to talk to you later about dividends. You remember, the main idea of putting money into a company is so then you can get returns, so that you can get something out of that particular capital that would have put in the company. So when a company realizes profits, that company would then give out dividends to its shareholders. And in this lesson, I'm going to give you two different types of dividends that I want you to keep remembering during the course of the year. And when it comes to financial statements, in grade 12, we're going to focus on three financial statements. We're going to have the statement of comprehensive income. I know you know this one as the income statement. We'll also have the statement of financial position, known as the balance sheet. And then lastly, you are going to learn what we call the cash flow statement. And I'm going to show you during the course of the year, what is this cash flow statement? How does it help us? Let's go on. And then when the company is registering, there is a part where they will declare the maximum number of shares that they wish to sell, to issue to the public. And we call that the authorized share capital. You'll find that other companies can say up to 1 million, and others can even say up to infinity. It depends on how they've registered the company. And then out of the authorized share capital, they will not issue everything at once. They'll issue in a different way. At times they can issue a portion. It can be between 5% or 50%, 60% of the authorized. Whatever is issued, we then call it the issued share capital. This is what we've already issued to the public now. So the issued share capital, it is the number of shares that have been sold to shareholders. All right. So we are going to calculate how many shares we've issued. And on those issued shares, we would then calculate our dividends. So the moment we talk about dividends, you have to quickly remember issued share capital, because we only issue dividends, not to the authorized, not to the maximum number of shares that the company can issue, but we give dividends only to the issued number of shares. Okay, let's go on to the next one. The next one is issue price. Issue price. When we talk about issue price, we're basically talking about the price at which shares are issued to the public or sold to the public. At what price did we issue these shares to the public? And it has an effect. All right. And we'll talk about this as we go, even in the next lessons, that at what price does it favor the existing shareholders when we issue shares to the public? So you have to keep that in mind when you are looking at the issue share price. Dividends. Okay, so remember I mentioned dividends earlier on. It is that portion of profits after tax which has been approved to be shared amongst the shareholders. And I say there's two. We have what we call our interim dividends and our final dividends. Interim means during. So interim dividends are paid during the financial year, and then the final dividends are declared at the end of the financial year, only to be paid in the next financial year. And then we have what we call provisional tax. So what happens is, as we are in the course of business, we understand that we are subject to paying our income tax over to SARS. So we will make provisional payments during the course of the year. And the company will make 2 provisional payments, that is, after 6 months. So you'll find that in the questions, even in the activities that we'll be doing, you'll find that there will be 2 provisional payments that the company would have made over to SARS. And then when we've made provisional payments, you realize there's one of 2 options that can happen. We may either pay more to SARS, that SARS ends up owing us, or we pay less to SARS, that we still have to pay more again over to SARS. So you need to remember that, especially when we do our SARS income tax account. Retained income. Basically, when we talk about retaining, to retain is to keep. To retain is to keep. So when a company realizes profits, they do not distribute everything. They have to know about challenges that may emerge in the future. So they will distribute a portion of the dividends, then they retain, they keep a part for the rainy seasons. All right. So they will keep a part for the future growth of the company. All right. Or to expand the company. So that is what we call retained income, when a company keeps a part of its profits and not distribute everything in the form of dividends. Buyback of shares. By now, you should have heard about this. Buyback of shares. Remember, I spoke about the authorized share capital, what the company is allowed to issue to the public. They have not issued everything. And then out of that authorized, there is now what we call the issued. Out of that issued now, certain shareholders may wish not to be part of the company anymore. So the company can buy back now these shares. Hence, we end up having the buyback of shares. These are issued shares that have been repurchased by a company from the shareholders. And once these shares have been bought back, they cannot be reissued. I repeat, these shares cannot be reissued, but rather they are retired or cancelled. So we cannot issue them again. Okay, someone was saying, Mr. Simbi, you've spoken for quite some time. We want to see the figures. And I was like, okay, let's get the figures rolling. But you need a calculator, remember that. So I'm going to give you just a few seconds. Make sure you grab your calculator, bring it closer so we can begin our calculations. I'm going to give you 2 minutes to grab your calculator. So you're going to have 2 minutes for you to grab your calculator, and I'm going to see you after 2 minutes. Welcome back, guys. I hope you found your calculators and you have somewhere else to write as well. If you have those things, then let's begin to work. I'm sure by now you received this worksheet which came to you through your teacher. On the top is written online class 31 January, the very last day of January. Okay, so every Friday, you're going to keep receiving these worksheets. Make sure you remind your teacher. I know the day gets busy at times, and then they're human, so at times they may forget. But you remind them, ma'am, sir, please don't forget to print that worksheet. If you don't have printing facility, they can still share it to you on your WhatsApp group. But keep reminding your educators that they may give you this worksheet so that when we come to class like this, it becomes beneficial for everyone. Okay, so we go. Let's begin. The information reads, so this is my activity 1A. I'm going to get another one again with similar transactions. The information below relates to Hoser Limited for the year ended 20th February 2023. So if it's ending 20th February, it means it began on the 1st of March 2022. That's something that you have to keep on your fingertips. Once you read information, it must click. That light bulb must just go in your head. Okay? The company was registered with an authorized share capital, 1 million. Remember, we spoke about the authorized share capital already. During the year, the company issued shares at different times and prices as shown below. Okay, now record the transaction in the CRJ and ordinary share capital account. So what we want to do is to record these ones separately, and we see how they can be recorded. Okay, let's go and see. I have my CRJ here. Okay, so if I am going to issue shares, I want to record this first issue of 300,000 shares. I will now say in my details, I'll come here, then I'll say shareholders. So I'll come here, then I'll say shareholders. In my bank, I will now say my 300,000 times 5 rand. Let's see those calculators now. Okay, so let's bring it here on the side. I'll now say my 300,000, then I'll multiply that by my 5 rand, and that will give me 1.5 million. So I'll come here, then I'll say bank 1.5 million. 1.5 million. Okay, and then I'll come again here, and then I'll say again 1.5 million. In my sundry accounts, and then I'll now say ordinary share capital. Ordinary share capital. Like that. Are we good? And then I remember then that must be shared onto my ordinary share capital account. So I'm posting it now to my general ledger. My ordinary share capital account, it's an equity account. And I know that my equity account increases on the credit side. On the credit side, it's a plus, but on the debit side, it is a minus. Okay, so I'm going to come and say here, I'm going to say bank. Okay, and then remember, this is for my CRJ. How much am I getting here? 1,500,000. Like that. Still okay? Okay. So that is with the first transaction there on the 30th of April. In the month of April, that is what we would have done. In the month of April. Now, let's go on now. We are going to now go and see what happens in the following year when we are now in January. We want to record this one now. When we are now in January, we're going to record this one now, the 450,000 shares. So the principle is going to be the same again. I'm going to come here and I'm going to say again, shareholders. I'll say shareholders. And then I'm going to say 450,000 multiplied by 6 Rand 50. Calculators. There we go. So it's going to be my 450,000. Then I multiply that by my 6 Rand 50. And then I'm going to end up with 2,925,000. So I'm going to come here and have my 2,925,000 like that. Then I come here, it's the same, 2,925,000. Under my details, what do I say? Ordinary share capital. Ordinary share capital. Then I know that for my journal, I must post to the general ledger. So I'm going to come now. I have a balance because remember, this was already done in the month of April. Now we are in January. So I'm now going to say the balance is 1.5. Remember, we did that one. And then here I'm now going to get my bank. Here is my bank. And when I get that, it's bank CRJ. And that is the same amount, 2,925,000 like that. Now, let me tell you a secret. The moment you issue shares for the second time, you must immediately calculate what we call average price. You heard about it in class. Yes, you heard about it in class. You calculate average. How do you do that? You simply add these amounts here. So you're going to say, my 1.5 million, come over here. We're going to say, my 1.5 million, 1.5 million, there. I'm going to add my 2,925,000. I get them. They give me 4,425,000. So I'm coming here. I have my 4,425,000. Then I divide this amount by my number of shares that are in issue, not the authorized, but the number of shares in issue, which is 750,000. Am I making sense? Thank you. So I'll come here, then I'll say my 4,425,000 divided by my 750,000 like that, and I get 590. So I'm going to come here. My average price is 590. This is going to become very important as we go. My average price becomes 590. Okay. Are we good? Did we understand what we did? Okay, so this was like the basic, the intro, the simple, the diluted version of this. Okay, so once you understand this, you need to do more practice, more activities. All right, once we understand this, now we can go to do another activity, baby. All right, can we do that? Let's try it. Here we go. 1B now. 1B. You will find this on your worksheet. It is there on your worksheet. Okay, let's go to 1B. The information reads, the following balances appeared amongst in the general ledger of Bambinos Limited. I know here I'm given my ordinary share capital balance 7,600,000. We good? Okay, let's go to the next one. The next one then reads, ordinary share capital. The business has an authorized share capital of 4 million shares. Only 2 million were in issue. And then we're given all this information. But let's see, what do they want us to do? Or they want us to prepare the ordinary share capital account. And the good thing is the balance is already put. That one was an easy one. Okay, that one was a giveaway. Okay, it's in the balances here, so that's why you find it down here. It's not a problem for this one. Okay, let's come to the information there. Let's start with the bullet number 1. The business is authorized of 4 million shares. Only 2 million shares were in issue 1st of March. So in other words, for us to arrive at the 7.6 million here, we had issued how many shares? We had issued 2 million shares. Okay. And then we are told that on 15 April, the company issued 60% of the unissued shares. Okay. So here we have issued 2 million here. We have issued 2 million here. How much is our authorized? How much is the maximum? How big is our pot of shares that we can take out from? It's 4 million. From that 4 million, we have issued so far 2 million. Okay? So from the 4 million, if we've issued 2 million, how many shares can we still issue to the public? We can still issue 2 million again. Okay. We good? Okay. Now, it then says, on the 15th of April, the company issued 60% of the unissued shares. Okay, let's explain this a bit better. This big pie, I know it's a funny color for a pie, but this is our pie. This big pie is our authorized share capital, and the total is 4 million. Here's my 4 million here. We good? And then from this 4 million, we have already issued now 2 million. We have already issued 2 million, like that. This is what we have here, this 2 million. We can still issue this other 2 million here on this side here. Now, of that unissued, once they say unissued, they are talking about this side here, the 2 million that has not yet been issued. Of that 2 million, the company has issued 60% now. All right, so it means I'm going to take my 2 million, which is unissued here, my 2 million, which is unissued. Of that 2 million, which is unissued, I'm going to come and say, multiply that by 60%, which is 60 over 100. How many shares did we issue on the 15th of April now? Calculators, let's go. I'll come here and then I'll say, of the 2 million, we're going to issue 60%. All right? That means I'm going to issue 1,200,000. I'm going to issue 1,200,000. That's what I'm going to issue now, 1,200,000. And this 1,200,000, I'm going to issue it at 5 rand per share. So I'm going to say my 1.2 million, multiply that by 5 rand. Like that. We good? Let's see how much it's going to give us. 1.2, multiply that by 5 rand. And that's going to give me 6 million. It is equal to 6 million rands. Like that. So I'll come here now and then I'll say the company has issued. So I'm going to say bank over here. Bank what? CRJ. All right. You want me to show calculation? Okay, let me do that. So I'm going to come and show you here that I issued 1.2 million and each share was at 5 rand. That is going to give me how much? That's going to give me 6 million. Are we good? All right. Once you get that 6 million, what did I tell you when we were on 1A? Immediately you calculate average price. Do you still remember how to calculate average price? Let me hold your hand. You add these two amounts. So you say your 7.6 million plus your 6 million. Let's bring the adding machine. Here it is. I already have my 6 million here. So I'm just going to add my 7.6 million. And that's going to give me 13.6 million. So I'm going to come here. We have 13.6 million rands. And we then add the number of shares. Remember, we had 2 million at the beginning, okay? And then we have issued again 1.2. So if it's 2 million plus 1.2 million, that gives you 3.2 million. You divide that by 3.2 million, like that. Calculators, let's go. So I'm going to divide my 13.6 million by 3.2 million. Let's go. Divide by 3.2 million. That's going to give me 4.25. So my average price becomes 4.25. We good? Okay. So what I'm going to do now, since we have all these figures, I'm going to remove them because I'm going to show you something here now. All right. So remember that the 4.25. Remember the 4.25. What was the 4.25? The average price. Remember the 4.25 was our average price. Okay. So I'm going to come here now. The triangle. And on this side of the triangle, this is where we record our amount that goes to ordinary share capital. This is our average price. And the average price is, remember we calculated it. How much was it? Okay, you want to see it on the calculator. There it is. 4.25. It's 4.25. We good? Now, then they say on 30 January, 500,000 ordinary shares were repurchased. We're buying them back now from the shareholders, from the issued shares. And then they're being bought from a dissatisfied shareholder at 6 Rand per share. That 6 Rand is not going to come into the ordinary share capital. What comes into the ordinary share capital is the average price. That 6 Rand, we're going to take it to bank later on. A couple of weeks, we're going to talk about a statement called the cash flow statement. That is where we take that 6 Rand, that one over there. And then the difference between the 6 Rand and the 4 Rand 25, the difference between that is 1 Rand 75. And we take it to our RI, the retained income. That was 1 Rand 75. We take that to the retained income. So let's record now the buyback of shares. Remember, equity account. That means on the credit side, it increases. But on the debit side, it will decrease. That means I'm going to come here and I'm going to say now, bank. Can I open a bracket? Very important. So I can show you how we get that figure. How many shares to do buyback? That's your 500,000 there. 500,000 shares. And we multiply by what? Do I use the 6 Rand? Certainly not. Why do I use the average price? How much is that? 4 Rand 25. Blah by 4.25. Can I close it? Now, you know by now, adding machine. Okay, so I'm going to say my 500,000, I multiply by 4.25. That gives me my 2,125,000. My 2,125,000. Okay, and then let's close the ledger account. Let's close the ledger account. I'm going to draw my lines here. Okay, not exactly straight, but okay, it's decent. Okay, there is my lines. So I'm going to say my 7.6 plus my 6 million. Remember, that gave us how much? That gives us 13.6 million. So here are my 13.6 million. Here are my 13.6 million. And then here I'm going to get my balance carried down. So I'm going to say 13.6 million, 13.6 million minus the 2,125,000. 2,125,000. That's going to give me 11,475. 11,475,000, which therefore comes down here as I have my balance brought down. 11,475,000. That's my ordinary share capital account. Okay, we good? All right. Can I go on? Okay, so we can move on then. Let's move on then. Let's move on. Now, what we have now is from the ledger account, it's in most cases over the years, this is what we've seen over the years. You can take it back from 2022, 2023, 2024. In your term 1 SBA task, which is the presentation, in most cases, you would find these ledger accounts. So it's very important that you know these ledger accounts because normally they're tested in our presentations. But as you go maybe to the test and you go to your June exam, your prelim and your final exam, they normally would ask the notes. So this ledger account is the same as the note. So we want to do the note and we see whatever we did in the ledger account is the same as the one in the note. Okay, so we want to do the note now. Good. And this is called note number 7. This is called note number 7. The ordinary share capital. So it must have a top part which speaks about the authorized share capital. I've cut that. I'm just going to focus on what we call the issued. So here we're going to focus only on the issued. Can we begin? Let's do so. So at the beginning, we were told that there was 2 million shares, which is your 2 million here. 2 million shares at issue, at the beginning. And then we are told these are ordinary shares at the beginning. They did not tell us the price, but we are given the capital. So here it's going to be 7.6 million over here. We good? Let's go on to the next one. And then they said out of the unissued shares, you remember we did that calculation where we had the remaining 2 million out of the 4 million. Remember, we took out 2 million, so we remain with the 2 million. And then they said multiply by 60%. And you remember that one. If I can just refresh in your mind, where we say the 2 million times the 60%, and we ended up with 1.2 million. You remember this one now? Okay, so of that 1.2 million, these are shares that are being issued, and they're being issued at 5 rand. So I'll come here and then I'll say 1,200,000 ordinary shares issued. They're issued at what price is this? At 5 rand. And you remember, if we do that, it would be times 5, and it was giving us 6 million, and it would give us 6 million like that. And automatically you would calculate again average price, and that would be your 13.6 million divided by that one. You remember the 4.25, and then you bring your 4.25 here, that is on the ordinary share capital. Okay, then if you read this one, it says 500,000 shares were repurchased. That means I open bracket here before I even put anything. What did I say? You open brackets before you do anything. So I come here, then I say 500,000 owner shares repurchased. These are repurchased at, and in here we have 6 rand here. Do I bring the 6 rand here? No, the same as we did in the ordinary share capital account. The 6 rand will go to the cash flow statement / bank. You remember this one? Okay, this is where the 6 rand will go. And then here you have your 1.75 rand, which is your retained income. So that means I'll come here, and these are repurchased at 4.25 rand. So I'm going to come here. I'm going to say my 500,000, which is my 500,000 shares here, that multiply by 4.25. Okay, you forgot the point, 4.25, and that gives you your 2,125,000. So come here, it's 2,125,000. Then we close it off. So let's do that together again. So I'm coming here to say my 2 million plus 1.2 minus 500. So it's 3.2 minus 500. That's a 3.2 million. Or you're saying I must start it again from the top. Let's do it that way then. Let's do it that way. Let's start it from the top. I have 2 million plus 1.2 million, then minus 500,000. That gives me 2.7 million. So I come here, I have 2.7 million here. 2.7 million ordinary share capital. This is at the end. At the end, and so remember there's a line there. Here, there's a line here. Okay, and then it ends here now. This is where it ends. Okay, it ends there. All right, we're going to take 1 minute break. Now I'm going to see you shortly.
Excellence. Excellence is a habit. Excellence is a quality you have, a quality I have. It's a quality we have when we honor what is true to us. Yes, we are gifted differently. uNkulunkulu akasinganga ngokufana. Excellence is striving for your best. Whenever you have a particular project, test, homework, uzibuze, ask yourself, is this my best? Can I put in more effort? Excellence is striving to be in the top 1% of the area in which you are gifted. And so I challenge you, in every single thing that you do, in every single area that you're gifted in, Whether it's sports, it's academic, or tula, whatever that gift is, strive for excellence.
Welcome back, guys. So remember what we're doing. We're calculating the amount to bring down here. So let's bring back our calculator again. And there is our calculator. Right? And then let's continue. So what we're going to do now is we're going to say our 7.6 million plus 6 million minus 2,125,000. 2,125,000. That's going to give me 11,475,000. So it gives me 11,475,000. And then that's our ordinary share capital note. You will see that it is basically the same thing with your ordinary share capital account that we already have completed. Okay, so once you're done with that, the next thing then has to be what gets recorded in your retained income. Okay, so in the retained income, we want to record. Already we have our balance. Retained income is an equity account. So on the credit side, it will increase. And then on the debit side, it will decrease. So you have a balance, all right, on the retained income. It was given 900,000. And then we have the amount that we are going to close off from the appropriation with. And then on the debit side, that's what I'm going to record now, my repurchase of shares. Remember, we are told here that we repurchased them at 6 Rand at the top, cash flow. And then here it's ordinary share capital, that is your average price, and that was your 4.25 Rand. And we agree that the difference, which goes to your retained income, is your 1.75 Rand. So I'm going to come here and I'm now going to say bank. All right. And then I'll say, how many shares did we buy back? We bought back 500,000 shares. And what amount did we pay above the average price? Above the average price. That is your 1.75 Rand. So it becomes 1.75. So I'll come here now and I'll say, my calculator, it is going to be 500,000 times 1.75. And then I end up with 875,000. So you have 875,000 over there. And then I can close this ledger account up now. So I'm going to close it off. And then I'm going to say my 900 plus my 650. That gives me my 1,550,000. I added that. So it's a ledger account. Remember, the side with the highest amount, 1,550,000. Therefore, here I'm going to get my balance carried down. How do I get it? I'll say my 1,550,000 minus the 875,000. Minus the 875,000. That's going to give me 675,000. So I come here, that becomes 675,000. And then down here, I'm going to end up with now my balance brought down 675,000. Like that. We good? All right. And then we're going to move on to the next account now. Okay, so let's come now to activity number 2. Activity number 2. If you're ready, we can begin. It reads, the following balances appeared in the general ledger of Bambinos Limited. And then we have the information, and what we are required here to do is to open a SARS income tax account. Now, you will see with the SARS income tax, you can have a debit balance, you can also have a credit balance. And these two balances do not mean the same. When you have a debit balance in your information, as you see here we have a credit. If you have a debit balance, that means in the previous financial year, we paid more to SARS than the income tax amount. Therefore, SARS owed us from the previous year. And therefore, it is considered an asset. If the balance is debit, it means we paid more to SARS in the form of provisional payments, and we ended up paying more than the income tax amount. In that case, SARS owes us, and we consider it an asset. But if it is credit like this, it simply means of the provisional payments that we made in the previous year, they were lesser than the income tax amount that we were supposed to pay over to SARS. In that case, we still had to pay more to SARS. So we owed SARS. In this case, it is a liability. A liability. Okay, so let's see if we can open this SARS income tax account. We're given a balance of 18,000 and the balance is credit. Credit. So it means I'm going to come here now on my credit side because they said credit balance. I'm going to come and say balance brought down. And my balance brought down is 18,000. What does that balance mean? We owe SARS 18,000 from the previous financial year. Then we're told, bullet number 1. The income tax due in respect of the previous year was paid. So the 18,000 that we were owing to SARS, we have now paid it. Okay, so remember we are now on 20 March 2022. So that means I need to record that I paid it. I'll come here and I'm going to have my bank. Remember, paid CPJ. Okay, bank. And then how much are we talking about? 18,000. We have paid that 18,000 that was due to SARS. We good. Then next information. The company paid 250,000 rands to SARS for provisional tax on the 31st of August via EFT. So we have a provisional tax payment on the 31st of August. And we paid 250,000. That means I'm going to come here and I'm going to say again, bank CPJ. And we paid 250,000. So I'm going to come here, 250,000. That was the first provisional payment. Then they say, an EFT payment for the second provisional tax was made on 15 February. Okay, so we now have our 2 provisional payments. They don't tell us the amount, but then they say the total provisional income tax for the year was 725. The total. So it simply means if I have my first provisional payment, which is 250, and my second provisional tax payment, I don't know, but my total provisional tax payments is 725. That means I can get the second provisional tax payment amount. And for me to do that, I'll simply say my 725,000, then I subtract the 250,000, which is that one. Then I'll remain now with 475. So I'm going to come here. My second provisional tax payment is 475,000. I think that makes sense. So I'll come here, then I'll say bank over here. See, reject. How much is that going to be? 475,000. Like that. Okay. Then we're then told income tax was calculated at 30%. Income tax was calculated at 30%. Net profit after tax amounted to 1,750,000. Okay. So let's clarify this area. It's very important that you listen to what I'm going to say now. When we prepare our statement of comprehensive income, you realize that at the end of the statement of the comprehensive income, right at the bottom, that's where we're going to record our income tax. But we're going to have 2 profits right there. The first one is going to be called net profit before tax. And that is 100%. Net profit before tax, that's 100%. And then we're going to come and say minus income tax. We subtract the income tax. And we're told here that the income tax is 30%. So I'm coming here to say less 30% of income tax. It therefore gives us the second type of net profit, which is net profit after tax. which is 70%. The second type of net profit. Net profit after tax, which is 70%. So we are told here that net profit after tax is 1,750,000. Now we use the Cremora method. Did I tell you the story of how we get the Cremora method? Okay, let's call it the UK method, if you so wish. The UK method. Or the what you want over what you have. This method simply says, it is what you want over what you have, then what you have will give you what you want. This is the method in simple terms. You have had it with different names, and I think I even mentioned some of the names. It's one and the same thing. It's what you want over what you have. Then what you have, it will give you what you want. But you have to take note. It has to be percentage over percentage times rands to give you rands. You got that one? Okay, so let's see. What do we want? We want income tax, which is 30. What do we have? We have 70. And then we multiply it by our 1,750,000. And then we want to get our income tax for the year. Come over here, my good friend. Let's see if it can help us. Okay, let's see if I can use that button. I have 30 over 70. Is that okay? Then we say multiply that by 1,750,000. And then that gives me 750,000. I'm going to come here and I get my 750,000. What is that? That is my income tax. So I'm going to come here and I'm going to say income tax. Your income tax will always be on the credit side. So this format, it's more like it's cast in stone, except the balances. But your provisional payments will always be on the debit and your income tax will always be on the credit. What moves is the balances. The balances. But your provisional payments will always be on the debit and your income tax always on the credit. Follow me? Okay, cool. So income tax is how much? 750,000. Can I go on? Okay, so we're gonna close this ledger account. We look for the side with the highest amount. Which side is that? I think it's the credit side. You have your calculator ready also. So we say we have the 750 already plus the 18,000 plus the 18,000 plus the 18,000 like that. That's going to be 768,000. So I'm going to come here and I'm going to get my 768,000 like that. Okay, and then my double lines. Come here and then my double lines. 768,000. So I'm going to come here now and I'm going to get my balance and I'm going to call it carry down. How do I get it? I'll now say my 768 minus the 18,000 minus the 250,000 minus the 475,000. Okay, and then that's going to give me 25,000. So 25,000 becomes my balance carried down, which therefore becomes my balance. Let me see if I can squeeze it down there. Balance brought down. That is your 25,000. Managed to squeeze it in. Can you see that? Okay, so that becomes your SARS income tax. But then I need to show you how to record this amount now in this account that we called income tax. All right, so allow me. Let me clear up some space for myself here. All right, let me clear up some space for myself here where I was doing my calculations here. Okay, let me see if I can get some space over here. And then let's see. So I'm going to have my income tax account. All right. So let me have my income tax account. So in my SARS income tax, I credited it with income tax. That means in my income tax, I'm now going to debit it with SARS income tax. With SARS income tax. And how much is that? That's my 750,000. This one here. That one. Okay? And then this income tax account, I'm going to close it off to my appropriation. I'm going to close it off to my appropriation, which is my 750,000. That means I must now come to my appropriation account, where on the debit side now, the debit side of my appropriation, okay, let me just clear that part so that you can see everything clearly here. Cool, like that. And then on the debit side of my appropriation account, I'm then going to come and say income tax. How much is that? 750,000. And obviously, here you're going to get your profit and loss. Here is your profit and loss. We're talking net profit. All right. And then you get your profit and loss. That's your net profit before tax. Are you able to get that one? You can simply say this one, that's after tax plus the income tax. So it can give you that one. Did you get that one? Okay. You want me to do it with you? Okay. There's several ways in which you could have got this profit before tax. Let's start with the simplest way. You remember what I told you? How many profits did you do? And the income tax. So remember, it was net profit before tax, which I said 100%. And then I said income tax. You remember that? 30%. Oh, now it's coming back, isn't it? Then I have my net profit after tax. And I said how much? 70. Okay, so here I'm given the 1,750,000. So the easiest way would have been to say, since I have my income tax, which is 750, so I would have simply said 750,000 plus the net profit after tax, 1,750,000. And then that will simply give you your 2.5 million. That would have been the simplest way. But if you like playing around with the calculator, you could have said, I want 100. Okay, so you could have said, I want 100. What do I have? I have 70. You multiply that by 1,750,000. How much is that on your calculator? 2.5 million. So there were other ways in which you could have come back again to that profit and loss amount. Practice, experiment. Make sure you practice daily. Sit, do your work. Make sure you commit this year to your studies. Okay? Gonna move on to the next one. Let's do so. So I have activity 3. Okay, I hear some saying, Miss Simbi, please allow us to go get some water to drink. I'm going to give you 5 minutes. Make sure you get a nice bottle of cool water so you can enjoy. Okay, I'll see you after 5 minutes. See you after 5. Hello guys, and welcome back from the short break. So with me here, I have activity number 3, and I want us to do this together. Make sure you have your calculator once more, writing paper. That is if you do not have the worksheet. But if you have the worksheet, it becomes very easy for you to complete this together with me. Okay, let's see what we are required to do. Here it's SARS income tax. You can see this one now is no longer a credit balance, but rather it is a debit balance. And then let's start working. So what are we required to do here? Let's see what we are required to do. To begin, we will start with our SARS income tax, and from there we'll do the income tax account. Okay, but maybe for us to focus better, let's just start with our SARS income tax. We are told here that the balance is debit. That means I'm going to come here and I'm going to say balance brought down, and the balance is 8,000 and is debit. There it is. So in this case, it means in the previous year, we had paid more for provisional tax payments, to the point that SARS actually owes us as a business. And then on 20 July, the total amount for 2 provisional tax payments was 360,000. Very key. That is the total amount. 55% of the total was paid in August. So let's start with the amount paid in August. So we're going to say 360,000. Then we get 55%. Okay, let's see how much that is. Let's come to our adding machine. There we are. So we now say 360,000. We multiply that by 55%. That gives us 198,000. So this 198 is what was paid on 31 August. So I'm going to come here and then I'm going to call it bank. That's my first provisional payment. Okay, remember CPJ. All right, so I'm just going to put it here. And how much is that going to be? 198,000. 198,000. That's my bank. And the second payment was on 28 February. So I'm going to come back again here and I'm going to say bank. So the second payment, we're simply saying 360 minus 198. In other words, we want the 45%. So we can get the difference. It will still be the same. So I'll simply say 360,000 minus 198,000. Like that. 360,000 minus 198,000. And that's going to give me 162,000. So I'm going to come here. My second provisional payment is 162,000, like that. So we are done with this part here. It then says the net profit for the year after taxation amounted to 495,000. Very key. Net profit after taxation. Net profit after taxation. Income tax is charged at 30%. Let's go back again to what I taught you. I taught you about 2 different types of profits. You have your net profit before tax, and we agreed what percent is it? 100. And then we have our income tax, which is 30 in this case. And then we're going to have net profit after tax, which is 70. So the net profit for the year after taxation, net profit after tax, that is the 945,000. What do we want? We want income tax. So that simply means I'm going to come here and I'm going to say income tax. And I'm going to open my bracket. Let me do it down here. What we want is the 30. What we have is the 70. And we multiply that by the 945,000. By the 945,000. I close my bracket. Let me see on my adding machine how much that's going to give me. 130. I have 70. Okay. And then I'm going to say multiply that by the 945,000. And that will give me 405,000. So my income tax is 405,000. That is my income tax for the year. Let's close off the ledger account. The side with the highest amount is the credit side. So I'm going to come here and I'm going to have my line here and my double lines. All right. And my double lines. I'm going to say 405,000 over there. I'm going to say 405,000 over there. Then I'm going to say balance, carry down. So I'm going to say 405,000. 405,000 minus the 8,000, the balance at the beginning, minus the 198,000, minus the 162,000. Someone is asking, Mr. Simi, why don't you just subtract the 360,000? I also don't know. I could have subtracted the 360,000, but I just wanted to show you that I'm taking the 8, the 198, and the 162. Remember, we have to take it slow so that we all get to understand what I'm doing here. Is that okay? All right, cool. So we then come here, then we remain with 37,000. So here it becomes 37,000 over there. So I come down here now. I'm going to have my balance brought down, which is 37,000 like that. Okay. After that, then, we're going to bring the next ledger account, which is my income tax account. All right, so I'm just going to erase that so that it doesn't go over my table. All right, let me come here then. So let me see if I can squeeze the balance here. Balance brought down. That was my 37,000 there. Okay, let's come to my income tax account. So in my income tax account, what am I going to do? I'm going to debit with SARS income tax, because in the SARS income tax, I credited with income tax. So I'm going to come here and I'm going to debit it with income tax. I'm going to debit it with income tax of how much? Of 405,000. And then I'm going to close this account off to appropriation. All right, appropriation 405,000. Then I now come to my appropriation account. And since in the income tax, I've credited it with appropriation, that means in the appropriation, I'm going to debit it with income tax. With income tax. And the amount is 405,000. Can we get the profit and loss? All right, can you get the profit and loss? That should be easy now. You know what we want. What do we want? Net profit before tax. We want 100. What do we have? We are given net profit after tax, that's 70. We multiply by 945,000. We close this bracket and we end up with 1,350,000. That's how it ends. As simple as that. I hope this makes sense. Does this make sense? Thank you. Thank you. All right. So once we're done there, then let's see if we can do one last activity before we go on to the next aspect. Okay, let's see if we can do that. We can do maybe one or more. Let's see if time can permit. Okay, let's go on to the next one then. All right, here's another one then. And here they want us to do dividends now. Dividends, ordinary share dividends, ordinary share dividends. You remember we spoke about dividends, and we spoke about how many types of dividends? Was it one or two? Two types of dividends. We spoke about two types of dividends. I spoke about the interim paid during the financial year. I also spoke about final, declared at the end of the year, and therefore they get paid in the next financial year. Okay, so let's hear what this information is saying. Lungisa Limited has an authorized share capital of 2.5 million ordinary shares. On 1 July 2021, they issued 1.5 million ordinary shares at R3 each to shareholders. So you can see here, once we talk about dividends, we have to look at the number of shares. We have to look at shares. Okay? Once we have to calculate dividends, we have to look at shares, because dividends are paid to shares, the number of shares. So you cannot separate these two. They come together. They come together. Okay, note, no additional shares were issued or repurchased since 2021. The company declared and paid an interim dividend of 14 cents per share. The company issued a further 300,000 shares at 420 cents each. The company bought back shares and the final dividend. Okay, so let's see how we can interpret all this information. Let's begin with the first part. The company declared and paid an interim dividend of 14 cents. So the company paid 14 cents. Now, on my ordinary share dividends, on the debit side, I'm going to come and say bank. This has to do now with my interim dividends. My interim have been paid, hence I'll say bank. And now, we paid 14 cents per share. The question is, how many shares were in issue? Very easy to tell. We're told that there's an authorized share capital of 2.5, but that was not what was issued. The company has issued 1.5 million shares. So it simply means if I'm going to pay my interim dividends, I'm going to pay it to the 1,500,000. So I'm going to come in, I'm going to say bank, I open my bracket, and I say 1.5 million shares. I multiply that then by what? By 14 cents. Okay, let's take this one a bit back so that we can really understand what is happening here. Okay, let's see if that is possible. Okay, so it's going to be 1.5, and then we multiply that by 14 cents. 1.5 times 14 cents. Okay, so let's bring this on over here. So it's going to be 1.5 million shares times 14 cents times 14 cents, okay, per share. That's going to give us 210,000. So we come here, it becomes 210,000. Okay, let's go on. That was paid. And then, if that one was paid, we know that the second one is not paid, but declared. And then a final dividend of 9 cents per share was declared. Now, on this, shareholders for dividends. Shareholders for dividends. To how many shares are we going to declare this 9 cents? Is it to the 1.5 million as we did with the interim dividend? Do we do it like that? Certainly not. Why? Because from this 1.5 million shares, the company has issued 300,000 shares more. The company has also bought back some shares, 50,000. So we need now to calculate how many shares we are having. I know in my mind, I can visualize now. Note number 7. So I can quickly come up here and I can have maybe an extract of a note number 7. Let me start. At the beginning, I started with 1.5 million, like that. Okay? And then we issued a further 300,000, like that. And then after that, we bought back. Once there's a buyback, what did I say? Brackets. That means here I'm going to get my brackets, 50,000. And then I close this up. Okay? Because the final dividend, and we're told the repurchase shares do not qualify. In other words, these 50,000 shares that we repurchase do not qualify. At times, the examiner would say the final dividend of 9 cents per share was declared to the shares that are on the share register. Let me put it nicely. The shares that are on the share register are the ones that are entitled to the final dividend. The examiner can put it in such ways to mean that for you to calculate your final dividends, you have to exclude the shares that we repurchased. And for us to do that, you say this 1.5, we add the 300, we subtract the 50. Let's see if we can have our adding machine. Come back to your place, my friend. So we say our 1.5, which was at the beginning, 1.5, then we add our 300,000, like that. Then we say minus 50,000, like that. That's going to give us 1,750,000. So we end up with 1,750,000. This 1,750,000. These are the number of shares that we can declare final dividends on. So I'm going to come here and I'm now going to say, okay, I'm just going to put it right here at the bottom. I'm going to say 1,750,000. Then we multiply that by 9 cents, 0.09 by 9 cents. I have to move you again, my friend, this side. Okay, so 1,750,000 times 9 cents. That's 157,500. So I'll come here, and here it's going to be 157,500. But what did I code this? I called it shareholders for dividends. I'm going to show you quickly what we're going to do. Then this account, I'm going to close it up now. I'm going to close it up. Okay, I'm going to close it up. And I'm going to say 210 plus 157. That's going to give me 367,500. That is 367,500. And I close this off to appropriation. I close this off to my appropriation and I say 367,500. That simply means when I come here, I'm going to come now to my appropriation and I'm going to debit my appropriation with what? With ordinary share dividends, which is 367,500. We're still together. Okay. And in my ordinary share dividends, I said shareholders for dividends. Remember, these have not been paid, only declared. That means I must come now to my shareholders for dividends on the credit side. That's a liability now. That's it. We owe the shareholders for dividends. And we're going to say ordinary share dividends. Ordinary share dividends. And that's going to be my 157,500. And then this account is completed. Are we okay? Okay, so we have a few minutes right now. I want us to do an activity of this nature, which pertains to dividends. And then maybe after that, we can call it a day. And then next week, I'll begin next week's lesson with major shareholding. Major shareholding. So during the week, I want you to search what is major shareholding. Okay, and then ask me questions during the week so that when we come to the class next week, Friday, same time, I can answer some of your questions on major shareholding. We do the next activity. Let's go. Activity number 4. There it is. On activity number 4, it reads Castle Limited. You are provided with the information for the financial year ended 28th February 2023. Complete the following for the year ended: ordinary share capital note and retained income. Okay, so we are now going to bring in our aspect of dividends and all of that into our retained income note. Okay, so let's complete one. We are given this information and here is our note. This is now simple. This is note number 7. Okay. Remember, we're dealing here with issued. Let us go. Authorized share capital, 1.6 million ordinary shares. 80% of the shares were in issue. What does that mean? It means I take my 1.6 million and I multiply that by 80%. Let's see if we can punch that on our adding machine. We say 1.6 million, multiply that by 80%. That's 1,280,000. Is that going to work? Yes, go. Let's go. 1 million. Say ordinary shares at the beginning. And then what are we given? We're not given anything else. Then we're told average price of each share amounted to 545. That means here at the beginning, the average price is 545. So the average price which we have here is 545 because there's not been any new issue of shares. So we will not calculate any average price. We're going to use what we're given. So that would be your 545 there. Okay, so let's see if we come to our calculator. Then we're going to say 1,280 times the 545. And that is going to give us 6,976. 6,976,000. Like that. Can I go? Let's go. And then 300,000 shares will be purchased in brackets. 300,000 ordinary shares. Ordinary shares repurchased at, what do I record in here? Obviously, the average price. Remember the triangle? I'm not going to draw it now. I'm just going to bring my average price, 545. 545. Let's see. So I'm going to say, let's bring you somewhere here in the middle. I'm going to say my 300,000 shares, multiply that by 545. That is going to give me 1,635,000. That's 1,635,000. We close the bracket. Then, an interim dividend was paid 30 cents. That means that interim dividend is going to be paid to what? To the number of shares minus this 300,000. I'm coming to that one. Additional shares were issued at 6 Rand. So we have shares here, ordinary shares issued at 6 Rand. We don't know that number of shares, but we're told on 20 February, 1,180,000 shares were in issue. 1,180,000 shares were in issue. So we can get this one now. We do the bottom up calculation, okay? The bottom up calculation. How do we do that one? We say 1,180,000 plus, we do the opposite now. We do the opposite when we go up. So we say plus the 300,000. Then we say minus the 1,280,000. That will give me 200,000. So here it will be 200,000 ordinary shares issued at 6 Rand. Okay, so it's 200,000 times 6 Rand. That gives me 1.2 million here now. 1.2 million there. And then I'm going to add these coming down there. And then I'm now going to say, from the top now, 9 million, 6 million, 6 million, 6 million, 976,000, 6 million, 976,000. Then I say minus 1,635,000, 1,635,000. Then I add my 1.2 million. And that's going to give me my 6,541,000. Where do you see that one? This one here. So that means our calculations were correct. So I'm going to end up with 6,541,000 there. That is ordinary shares at the end. Okay, let's see what comes next now. Let's see what comes next. What comes next is my retained income. There it is. Retained income. Format is of great importance. Know your formats. Fingertips. Once you read it, you must know what to write and where to write it. So we begin that with balance at the beginning. Balance at the beginning. That is the correct spelling for beginning, by the way. So balance at the beginning in 2022. All right, that is going to be 376,600. So I'm coming here. This is my 376,600. Are we good? Let's go to the next one. Then the next part is my net profit. We call it net profit what? After tax. Net profit after tax. Where is it? My correct net profit after tax. No need to calculate this time. We're sailing easy. This was given 959,400 net profit after tax. And then next part is the repurchase of shares before I do anything. Okay. How many shares were repurchased? 300,000 shares were repurchased at 465,000 above. Oh, this one was easy. We're given everything here. So I come here, it's 465. Because in the retained income, we record the amount above the average price. And then we're going to come here now. We're going to say ordinary share dividends. I need to get my interim as well as my final. Let's start. On my interim dividends, we declare 30 cents per share. But the question is, how many shares was I having? Remember, we had the 80% of the 1.6 million. Let's do the calculations so that you can remember nicely. We had 1.6 million, and we issued 80%, which was 1,280,000. You remember that one? We repurchased. How many shares? 300,000 shares. Okay, let me remove that so that you can see nicely. We repurchased. That was the first thing we did. We repurchased 300,000. So let's come here and then we say minus 300,000 like that. That would give us 980,000. And then we then say, let me redo this calculation again. Let's start from the beginning. Where I have my 1.6 million. Let's start from the top. 1.6 million. And then we got the 80%. Okay, we got the 80%, which is your 1,280,000. And then we later on came and we repurchased 300,000 shares. Then we say minus 300,000 shares. Minus my 300,000 shares, and we get that. Then we added new shares. You remember that one? The 200,000 shares. Then we say plus 200,000 shares. Okay. But now, for us to declare the interim dividend, we had not yet added the 200,000 shares. So when we were paying the interim dividends, it was simply the answer that we had initially, which is your 980,000. So I'm going to come here and I'm going to say on my interim dividend, that was 980,000, which is your 1.2 minus. So it's your 980, and then we multiply that by our 30 cents. We multiply that by our 30 cents. So I'm going to come here and I'm going to say 980 times 30 cents. And that will give us 294,000. That will give you 294,000. And then the final dividends. And the final dividends, they say additional shares were issued. So after that, from the 980, we added 200,000 shares, and then we gave a final dividend then. So we had 1,180,000 on the final dividend. Okay, so it's going to be 1,180,000. Then we multiply by the dividend per share. But here now, we are not given the dividend per share. They just said final dividends were declared. Then the question is, if I'm to multiply, what do I multiply? Because I'm not given anything. But what the examiner gave you was the balance at the end. So you come here and you say balance at the end. And you have your 284,600. That means whatever I have in here, in this box, I can calculate it and put it over there. So we can do the bottom-up calculation. Let's see if that can come out. So to do that one, I will now start from the bottom, which is 284,600. 284,600. Then I'm going up. I'm going to add 465,000. Then I'm going to say plus 465,000. Then I'm going to say minus 959,400. I'm going to say minus again 376,600. 376,600. And then I'm going to get 586,400. So I'm going to come here, then I get my 586,400 in bracket. And then I'll take that 586,400. Then I want to get the final dividends. So I'll simply say my 586,400 minus the 294,000. And that will give me 292,400. So the final dividend becomes 292,400. Then you close it. So in this one, you are not given the final dividend per share. You are supposed to do the bottom up calculation. Dear learners, we've come to the very end of today's lesson. I promised to touch your major shareholding, but guess what? We're going to leave it for next week. So next week, Friday, make sure you join me here. Invite a friend. If you know someone who's struggling, they don't know what is really happening in this year, tell them we have a class every Friday at this time, and please do join in. Remind your teacher to give you the worksheet so that everything can make sense. Dear learners, until next time, goodbye.